Hello, my name is Maria Bezubova and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz! Today we continue discussing market situation with prominent market analysts. And today's topic is hard to overestimate for the fertilizers industry because it is about key raw material, it is about gas. In order to discuss this topic, I am delighted to host a super cool guest, Ed Cox, editor of Global LNG at ICIS. I am happy to welcome you, Ed, and thank you very much for joining me today.
Well, thank you for the invitation, the opportunity, Maria. It's nice to meet you and to see your channel. Thank you.
Thank you. Ed, we meet just at the beginning of the second half of 2025, and obviously first half of this year turned out to be extremely volatile for all commodities markets and for energy markets at the first place, of course, due to the whole geopolitical turbulence that was there. TTF peaked at 58, close to 58 euros per megawatt hour in February, and then again peaked in the middle of Middle East escalation. US gas price was also very volatile and quite high, peaking at $4.5 per MMBTU. So what is your expectation for the second half of this year? Do you think volatility will calm down, or we should expect for more surprises there?
Well, I think the first thing, Maria, is that the TTF, which really does sort of set the tone for global LNG spot prices, in Asia and across the Atlantic basin, is obviously driven by a very wide variety of factors now, and that has to do with Europe being much more LNG import dependent. So, as you said, the Middle East impacted the sentiment of the TTF, which fed through to other markets. We've seen economic concerns, discussion around US tariffs also affecting sentiment. So I don't think we can say that things will calm down necessarily, just given the way that European gas markets trade and some of the companies that are trading the TTF now that financially as well. But fundamentally, the market is going to start to change as new LNG production ramps up. And we're seeing that happening now, not to a huge extent this year, but we are seeing new North American LNG production come online. So we're going to come to a point where the market fundamentals change. Now, that may well not be more until next year or 2027. But I think we can say that, when you push the geopolitics and the wider issues aside, fundamentally, the market is relatively balanced now. So while I do think that volatility will continue, and who is to say what unexpected events will come, we are seeing relatively stable demand in European and Asian markets for the rest of this year. There's always a question over the winter. Certainly the impact of any supply outages or very cold winter is always a major question. And Europe is now more exposed to LNG imports, so it could be very volatile there. But in general, we see this 30 to 40 euro range as being viable and sensible for the coming months. And then what happens in the winter could potentially be more volatile and higher, depending on really a cold winter scenario that I can maybe talk about a little bit later.
Right. Yeah. Thank you very much. Escalation in the Middle East, of course, was an, let's say, unprecedented event in the world for many years. Nothing like that, thank God, happened. But how this escalation affected suppliers, both suppliers and buyers' market behavior in the short and especially in the medium to long term. Were there any changes that you picked up?
Yes, I mean, it was the big story, and I suppose oil and gas prices moved very similar kind of correlation then, which hasn't been the case actually in recent years necessarily, but it was such a big shock. Obviously, we saw oil prices rise, we saw gas, LNG prices rise at the same time. Look, we didn't see an obvious impact on Qatari LNG production, which is the big deal in the Middle East, of course, and UAE production, obviously significantly smaller next door. We did see major concern and questions from large LNG buyers who are always doing risk management around what if this happens in this region, what if this happens. Now, of course, large LNG buyers are not exposed to one supplier, they're exposed to global suppliers, but there was genuine questions about what happens there. Obviously, the ultimate scenario would be a closure of Hormuz, which didn't happen, and I think would be very challenging to do anyway. We did see some shipping challenges getting vessels into Qatar, and there were scrambling of satellite data, which caused challenges to navigation for vessels in around the area, and that caused logistical challenges. So there were challenges to overcome, but we didn't see a production issue there outside Israel, which of course was a fundamental issue because pipe gas was cut to Egypt and that had an immediate effect on downstream markets. And Egypt is really the emerging LNG buyer globally, really, at the moment. So that is, of course, a slightly separate point that we'll come on to. So there were challenges, but I think, again, the market kind of spiked. It has reduced. Of course, that issue can return anytime. And Qatar is going to expand a lot of production in the next few years. So it's going to remain alongside the US very clearly the two key global LNG producers. Hence, they'll always be focused on that region. But I think Qatar remains, stable in a sometimes unstable region. But things have calmed. There will always be sensitive there, and I think a lot of people just were focusing on the LNG side of it particularly, and are now somewhat reassured. Iran is, of course, talked about producing LNG for a long time, but hasn't got to that point and isn't really a significant player, beyond on a wider level. Yeah.
Yeah, indeed. Thank you. You already touched upon both countries which play a very important role in fertilizers production, which is Egypt and Israel. And obviously, those were the most suffering, let's say, from escalation in the Middle East. So, how do you foresee what will happen further with Israeli gas production? Because Israel is an important exporter, of course, and unfortunately, the war is not over in the region yet. So, how do you see situation developing in the second half of the year?
Yes, I mean, we saw Israel stop production at the Leviathan field and also the Karish field. So that had, as a security measure, and Israel will always do that if it considers there's a significant security risk which could affect those critical energy assets. So that has happened previously, and I'm sure it will happen again at some point. And they'll always prioritize the domestic market balance in terms of security of supply for the domestic Israeli market. So as you say, Egypt was affected, and immediately we saw that impact on downstream markets. Now that production has resumed and the flows have resumed to Egypt, relatively quickly. So our expectation is that will continue unless there is another escalation, at which point I think we know what will happen, and we know that Egypt will be exposed, although Egypt is, of course, taking measures to ramp up this LNG import capacity drastically and significantly in the coming weeks at a big cost. I mean, at a big cost to Egypt, the Egyptian government, and taking out loans to borrow. But and that's very necessary. So that Israeli supply to Egypt, about 30 million cubic meters a day. I mean, that's equivalent to around one LNG cargo every 3 or 4 days, if you put it in those terms. So that shows how significant the Israeli flows are. But we do see that supply is continuing. But Egypt, and perhaps we'll talk about more in a little bit, has returned to being a major LNG importer, and that actually is a consideration on a global level because the volumes it's going to be buying are quite significant, 5-6 million tons this year, next year, for the Atlantic Basin and the Pacific Basin. So it impacts the global supply-demand balance. So there's a lot of interest in understanding what Egypt is buying, who they're buying from, what price, and how it will affect the balance. So it is beyond a regional story; it's a global story there.
Exactly. And for us in fertilizers market, that is definitely one of the most important stories because Egypt is one of the key benchmarks, actually, not only global suppliers, simply global suppliers, but one of the important benchmarks, and everyone orientates themselves at this benchmark. So, of course, we were all closely monitoring the situation there. And we have seen already several years, like in a row, gas deficits that hit Egypt during peak summer months when gas consumption is focused on the domestic, mostly air conditioning usage. And as you mentioned, they prepared for this year. At least they tried to prepare. Of course, Egypt was not able to prepare for this escalation which happened, which is a geopolitical thing. But we heard in the market that not only LNG cargoes are being booked, but also Egypt is trying to significantly reinforce their regasification facilities. How can you please elaborate more about this? How it moves, if gasification is enough, or if not, when do you think they will be fully ready to accept all those LNGs that they purchased?
Well, I mean, the big change is the new import terminals, the floating LNG import terminals. I mean, they've got one now, and they will have four soon. I mean, that is a huge increase in capacity. So they have one floating import terminal, they have three additional lined up. The government of Egypt has, even this week in early July, has commented further on that. One is on the way there now, and Jordan is also going to take another import terminal, which obviously connects on the Arab gas pipeline. So the that will, I think, immediately allow a significant step up in regasified LNG into the system. And that's why Egypt has done these big tenders. I mean, the 60 cargoes of Shell and Total Energies earlier this year. They did another one more recently, which is around 100 cargoes, but there's some flexibility there. So you could be looking at 200 cargoes into Egypt this year and next year combined, and I think you will see volatility in Egypt's LNG imports in line with domestic demand. So you may see cargoes, a push to bring them in earlier, deferred or cancelled, which all has pricing implications for Egypt. So there won't be a bottleneck around LNG infrastructure, providing those terminals are connected effectively and quickly, which the government seems confident of, but is also some work to be done there. But obviously there are challenges within the Egyptian network, as you say. We do see the intention to ramp up domestic gas production, but obviously that has been a challenge since the Zohr field, which made the change a few years ago. So I think Egypt will be in a stronger position, but also more linked to global market prices. So this could benefit Egypt if prices fall in the next 1 to 2 years on the market, but obviously it means Egypt is more exposed to potentially higher prices if prices move up, which would impact the domestic market as well. So I think the thing to watch is how effectively those import terminals are connected in the coming weeks and months, and how quickly those cargoes come in to see then the impact on the market immediately. I think that's the critical change that's coming in the short term that Egypt can effect.
Exactly. We will continue watching this very, very closely, of course. Let's move now to the supply situation. And you already touched a bit about the most important global supplier, which is becoming even more critical, which is US, of course. How do you see a supply from there in the second half? Because there is constant expectation regarding this new LNG export plants coming on stream, Plaquemines 1 and 2, and also Corpus Christi Stage 3. So can you please tell more about your expectations from all these new projects, and in general, what do you expect to see from the US, and so respectively how it influences the prices, and global supply demand situation?
Yeah, and I mean, look, we'll talk about North America because the first Canadian project just started. So LNG Canada on the west coast of Canada has just loaded a second cargo as of early July. So that's a significant step, and that's made up of a large number of very creditworthy companies, Shell, Petronas, PetroChina, that will go into their portfolios. We see the US as extending its lead as global number one producer this year. So our forecast this year is 118 million tons, up from 91 million tons last year. So it's a significant growth, and then something similar next year. So US is clearly the growth producer there alongside Qatar. The Plaquemines plant has started up really pretty quickly, and most of that volume's coming into Europe because it's spot business, and Europe's still reasonably nearby and attractive. And Venture Global, that operates the plant, is confident the second phase will be up and running this year as well. So that's 20 million tons coming to the market, kind of as expected. Obviously, there's a risk of delays with these new plants, but Plaquemines is running well. LNG Canada is in the process of ramping up. Haven't really seen the impact of the Corpus Christi expansion yet in terms of the trade flows that we're seeing, but Cheniere is saying that is in the startup process, so we'll be tracking that. So this year it's all about US North American expansion. Obviously next year will be the same, and then we'll really be looking at the Qatari expansion alongside North American increase over the coming years. It's too early to say there's a big market impact. That there's a lot of more demand that will come from the market when prices fall, particularly from Asia buyers, when prices start to fall to $10 from MMBTU or lower. There's a lot of extra demand that will come before we see a really long market. But I think people in the LNG market are just very closely tracking when each plant's going to start up, how long it takes to ramp up. So we've got Golden Pass, Exxon Qatar project, which is, they're saying the end of this year, early next year. I mean, that's had some issues, some challenges, that project. So that would be a big one to watch around this winter time. And then there'll be a little bit of a gap till the next ones after that. So I'd say there's always uncertainty with new projects, but we're starting to see that. I think, the way this wave is coming now. It's like from 2015 to 2020, there was the last wave, and it didn't all come in one go. It took a number of years to feed through, but this is really the year where we're starting to see the new wave coming through, and it will continue through till 2029, 2030. And the market will change a lot. New companies, a lot more ships coming to the market, a changing balance, and the US is behind that. So things are they're getting slowly perhaps better for the buy side, but it's still very, very early days. There's not enough new supply to really change the balance yet, but that will come later in the decade.
Right. And which other factors do you think is important to watch in terms of supply from the US? Let's say in the short term, we're speaking like 25, end of 25. Like, for example, tariff situation. We will see some developments very soon, right? Because some immediate actions will be taken by the administration this week, maybe, or next week, right? So how do you think, or some other factors, which other factors might influence the situation from there?
Yeah, no, I think, and into early August on the tariffs. I mean, in as much as the tariffs affect trade and the global economy, obviously that's a huge question. And then Chinese LNG demand is down this year, partly because of the state of the Chinese economy. So obviously, tariffs is not so much affecting the ramp up of plants that are under construction in the US directly, but it's having a material effect on demand globally. There's been a big discussion about regulation in US LNG markets, and which has, I would say, become somewhat easier going forward. But the challenge is when you look at new LNG plants that in the US that may still get developed, it's very much around getting a contractor, the cost of developing these plants, who's going to buy the LNG from new projects that aren't yet under construction. I mean, China at the moment is not going to commit to long-term contracts from the US, given their relationships with the US. So it's a slightly longer-term consideration. I mean, short-term, you're probably looking at, US natural gas market fundamentals in terms of, does it make sense to buy US LNG cargoes at the moment? And the answer is definitely yes. US natural gas prices have come up, but actually, the market is quite balanced. Storage is quite high in the US. Power demand isn't particularly strong compared to last year. So the domestic balance in the US is okay, and Henry Hub prices may well stay below $4, this year, which is very competitive for LNG buyers who are selling into Asia or Europe still at, 11, 12, $13. But the ramp up of US LNG projects is the big deal for in terms of domestic US gas demand. So when these new plants start up, obviously that has an effect on US nat gas. There's plenty of gas in the US. Sometimes it's a question of getting it to the plants through the midstream. But in general, you know, we see that the wider economic situation is, of course, critical, particularly in China, as to the health of the market, and that impacts gas and LNG demand. So that's something that everyone's looking at a macro level.
Thank you. Thank you very much. Of course, one of great changes that happened during past couple of years in the gas market is Russian invasion to Ukraine in 2022, which caused, I would say, the domino effect in the whole market. We see more sanctions implied to Russian LNG. But what will be the actual effect of those? What do you think? How do you see the supply further from Russia to the global market?
Yeah, and so the plan is still to stop all Russian gas and LNG into Europe by 2028. That's the plan. So the next step for EU member states is to come back to the EU by 2026, so March 2026, with their response to that process. So I mean, the thing to say is that most Russian gas has already gone. I mean, a few years ago, Russia was supplying over 40% of Europe's gas and LNG, and now it's under 10%. So the majority has already gone. Obviously, pipe gas is still flowing into the Balkans, Hungary territory, and quite a lot of LNG from the Yamal plant is still coming into Europe. So we do think it's going to be possible to replace that Russian gas and LNG. Perhaps the EU is looking at 2028 because they're looking at the ramp up of global LNG production as well, and to tie in those two things, although it would increase Europe's dependency further. There are a number of issues going on there. There's been certainly resistance from some European countries to stopping Russian imports, such as, Hungary, for example, the landlocked countries. That's an ongoing discussion. So I think we are also not sure the power the EU may have to completely eradicate Russian gas, depending on some long-term contracts that were already in place. I think that's a question going forwards. Certainly sanctions have had an effect on Russian LNG, so the Arctic 2 plant, and I mean those are the US sanctions as much as European sanctions. The challenges around getting vessels to that project, and two of the smaller Russian LNG plants. But that there are also European companies that are very embedded in Russia and Russian LNG markets, and there hasn't been a uniform view to fully step away. So I think that the EU is still wrestling with that situation. It has a roadmap, questions what the next steps will be, maybe more of a reduction. Obviously Russian transit through Ukraine stopped earlier this year and it's unlikely to restart. So we're in that path, but I think it's not a clear path saying 0% from Russia. But what I can say, there's a lot of interest from Central East European gas buyers to understand the LNG market. So we are seeing that real interest. How does LNG work? How do we connect with LNG suppliers? Even if we don't have direct access to a terminal, how do we get that LNG pipeline gas, regasified LNG into our country? So that's certainly a step change in the last few years. I think that's going to continue. That interest in LNG and LNG supply into Europe will increase in the coming years away from Russia.
Yeah, thank you. And do you see, or maybe can you mention some prospects for the projects in some European countries to increase independency, let's say, and increase LNG capacities of themselves?
Yeah, I mean, a lot of new import capacities come online the last 2-3 years, and if you look, France, Germany, Italy, other countries, and actually, we're only at about 50% utilization of LNG capacity across Europe as a whole in the last few months, because countries like Spain have a lot of import capacity that they can't necessarily move that gas to other countries very easily. So There are some terminals that are very highly utilized in Northwest Europe. We're going to see more German infrastructure come online, of course, in the next couple of years, some expansions like in the UK and the Netherlands. I think, to be honest, it's more about more supply coming online. It's about more supply coming online at a price that is attractive to buyers as much as European infrastructure. Europe has invested. It does have a lot of LNG import infrastructure and generally quite good connection between European countries. So you can move that pipeline gas around between European countries. But the market just needs more from the US, more from Qatar to be at a price that buyers can afford to pay. And I think that's obviously what's not there yet. So there will be more import terminals in Europe coming online, but obviously the question of price and downstream markets is a big one still. What's affordable and viable for downstream industries?
Indeed, indeed. Thank you. If we look back a bit, what happened in the winter 24-25 in Europe, consumption was significantly down because the winter was quite mild. And
Mm.
also, the industrial demand dropped because of all this macroeconomic, all this geopolitical turbulence and everything. How do you see the demand from European markets in the second half of 25? And maybe you have already some first forecasts for the winter. What should we expect?
Okay.
Mild, not mild? What should we expect there?
Oh, yeah, I wouldn't want to forecast the weather that far ahead. Obviously, we're having a very hot summer, I guess, across a lot of Europe, and that is putting pressure on the energy system. Not particularly gas, though. I mean, gas is not in the money for power generation across much of Europe. So we're not seeing a significant change in European gas demand, in the next few months. I mean, there's a little bit of a growth in industrial demand for gas that we're forecasting in the next couple of months. Not really any significant change for power generation sector or for the residential commercial sector. So we don't see a significant shift in gas demand in Europe in the next few months. There's a lot of demand for storage gas to go into storage in Europe before the winter. That's the biggest deal. How high are stocks going to be in Europe before the winter now? The mandate was 90% fullness from the EU. It's kind of gone down to 80% now because there's a little bit more flexibility. So it's officially 90%, but it can be 80% if you're in a difficult situation. But that is a chicken and egg situation, because if we go into the winter with 80% stocks in Europe, that means potentially we're more exposed come February or March in a cold winter. That means high prices. To get LNG cargoes in, it has a knock-on effect in Asia. So everything's connected now. So it is in Europe's best interest to have stocks as high as possible going into the winter, at least 90% to give us a balance. I mean, we do forecasts. In the case of a cold winter, our pricing forecast is, averaging over 40 euros a megawatt hour for the TTF in Europe. If it's a similar winter to we've had recently, mild winters, then we're forecasting more 35 to 40 euros. So it's kind of within the upper end of the range that we've seen in recent months. But we're not expecting gas demand shocks apart from weather-driven shocks over the winter. Now, obviously, that can come. And if there were a scenario where we had that in February or January and the same in Japan and China, then that is going to lead to higher prices and volatility. I mean, no question. We just haven't had that the last couple of years. But I don't think anyone will be complacent about it. But that is always the question. So people will be looking at the weather forecast and supply issues, LNG plants very closely come later in the year. In the meantime, it's just really stock building is the priority in Europe.
I see. Thank you very much. I think we have flew over the whole globe, almost the whole globe. The only region that we haven't touched yet in terms of demand is the East. You already touched a bit in terms of supply from there, but what is your expectation in terms of demand from the Eastern market? And again, I would like to focus a bit more on the most important fertilizers markets there, which is India, of course. And how about demand from there? Is India still the locomotive of demand or not?
Not for LNG this year, because coal has been very competitive, and I think that's stepped in a number of Asian markets, particularly for power generation, and we've seen that in India. So we're not really seeing a change in LNG demand in India this year. I think we're a little bit more bullish next year, partly because there'll be some improvement in the pipeline connection within India that could support more LNG imports and take them directly to market, including some fertilizer producers. So we could see LNG demand go above 30 million tons next year in India. So, 10% increase or more. But we're not really bullish on India. I mean, the other thing is price. And we do need to talk about price because at 12, 13, $14 per MMBTU for a cargo of LNG, we're not really seeing big spot demand from Asian buyers, India, but China as well. I mean, at Southeast Asian buyers. If the market goes below $10, we'll immediately see a jump in LNG spot demand, and we saw that early 2024, but we haven't had prices that low since. So we just need to see when that suggestion that will come. Maybe 2027, 2028. If production starts up, then we see a response. But until then, in India is I'd say a mixed outlook. China's the big deal. China energy demand's down this year. The economy obviously hasn't been great. Domestic gas production is pretty strong in China. Pipeline imports quite consistent. So we could see some recovery in the second half of the year in China. If there's an improvement in the economy, it's been very hot, so there has been higher gas-fired power demand in China so far in July. That could continue, but China is unlikely to surprise us, I think. And other markets, like Japan's a big deal, obviously, just in terms of the wider balance. They've got nuclear power generation coming back online, so I don't think we're going to see a big shift in Asian demand. Certainly not this year. There could be some increase next year, but it does depend on price a lot, I think, in terms of getting buyers back in. So I suppose that could pose some challenges to fertilizer customers if they are, linked to those upstream gas prices still.
Indeed, yes, indeed. Yeah, we will watch that very closely because again, it's one of the elephants in the room for us in fertilizers industry, and we have to watch them very, very closely. Ed, thank you so much for this super insightful discussion. And I would like to finalize it with a very small blitz with just three small questions to you. And those will be more, I would say, personal, rather purely professional. And blitz one, questions and answer, whatever you wish. So the first one is, what is that inspires and surprises you the most in the gas industry after so many years and after so many experiences that you had?
Oh, well, I think, look, I work in an interesting company with interesting colleagues. I think the way that markets are now moving, I mean, it's not a globalized market on LNG at all now, but the way that information is passed around and how it moves market sentiment and pricing. I mean, it is incredible how that's evolved, and seeing that and analyzing that every day. That's kind of exciting thing to do. I would say it's really challenging. And obviously, there's been a number of bad things happening in the world that have impacted price sentiment. But I do see that is a kind of an interesting exercise to do each day, and working with my teams, a lot of people very interested in the market, so that's kind of a good thing to be involved in.
Cool. Thank you. The second one, if you had 1 minute to speak in front of the whole industry, what would your message be?
I think that's that's another good question. I mean, I think the we can see the role of LNG is there going forwards. I mean, in the context of an energy transition where we move into a cleaner future, which is, of course, facing a number of challenges at the moment in terms of cost, I guess, and security of supply, and how that message it has changed perhaps in the last few years. Clearly, LNG has a role to play there in terms of supporting this transition. And so I think my message would be generally around having a transparency of data to enable companies to see market information. That's something we try and bring to the market, to understand how the market functions, the benefits of the market there. and also to support the wider energy transition and investment in clean fuels to move to a cleaner future. But within that, obviously, LNG, is going to play a significant role for years to come. So I think it would be probably around LNG's position in the market, and actually, the need for transparency, need for transparent pricing, so you get an effective, efficient, functioning market that's to the benefit of sellers and buyers.
Right. Thank you. And finally, the third question would be, how would you explain to the grandma what is your job as an editor in the gas industry?
That is a constant challenge. I mean, I do talk about publishing, although of course publishing has changed hugely now. We're very much data. It's forecasting, pricing, and numbers. So I always say I work with words still, and I work with numbers, and I work with charts and visualizations, and we're telling the story of the global energy market, basically explaining that what's driving energy demand, supply, and prices, and we're making that information available to everyone that wishes to see that. And you know what? Now people understand energy a lot more. It's such a big deal globally for all of us at home. I think people understand energy perhaps more than they used to. So it's a little bit easier to explain than it was a few years ago, but still occasionally challenging, but I'm trying my best.
Thank you very much, Ed. It was super insightful and super helpful, I'm sure, for everyone who will be listening to us. And I wish you personally and ICIS, of course, a lot of success in coming at least to the end of this year. And I hope we will see each other here again, and we'll have an opportunity to discuss developments in the LNG and gas market. Thank you again.
Well, thank you, and I hope so too. Thanks for the opportunity, Maria. All the best.
Thank you for watching. As always, I will leave all credentials of Ed and ICIS in the comments. Please let me know in the comments which other questions related to gas market dynamics you would like me to uncover, and I will be happy to do so with Ed next time. Please subscribe to the channel, put like to this video, push the bell in order not to miss any updates, and see you soon.